Hello, everyone. Just a short podcast here about state and local taxes, and the idea specifically of refunds versus payments and how they affect the deduction on our federal return. So, what's sometimes confusing is we have multiple ways of being taxed in the United States. So you have your federal tax and you have state and local taxes. For federal tax purposes, how much you pay in state and local taxes is deductible up to the $10,000 limit, of course. But what counts and what gets, in a year for how it was paid is particularly interesting when it comes to state and local taxes, because they're done the same way as federal taxes, in that there's withholding all your paycheck, and then also there are may need to be extra payments made to the state or local government. So our example here, this individual paid on 4/15/2019 $400 when they filed their state return. So when they filed the return, it had to do with, it was a 2018 return. When they filed it, they looked at their calculations and realized that they calculated that they needed to pay $400 additional of the state return. And this would happen the same way for the local, which we have in Pennsylvania, because we have both state and local, just to make extra confusing. They also paid some estimated state taxes. They feel like what was being withheld, maybe they have a business that is making money in addition to what they are getting paid as an employee. And so they made a couple of payments, one on August 15th for $200 and one on January 15th, 2020. And then during the year, they had $2,400 withheld from paychecks for their state taxes and remitted by their employer. So what gets included? Well, because this is paid, even though this has to do with 2018, this is paid in 2019. And so that it is part of our state and local taxes for 2019. The estimated tax, any of these payments, we're looking again at the date of payment. So we made this payment in 2019, so that counts as our state and local taxes. $2,400 withheld is all through the year, so that counts as 2019 state and local taxes. So we have $400, $200, $2,400 so far. This one is not paid till 2020, so we cannot consider that until we get to preparing our 2020 return, even though it has to do with 2019. It's a matter of when the date is paid, not when it is what is applied to. And then what the heck do we do with refunds? So in 2020, we're going to get a refund because we overpaid the state and local taxes. So we don't go back and change anything for 2019, because this is really excess 2019 we paid that we're getting back, right? But we don't try to bother 2019 because it's already filed, okay? And it doesn't affect the taxes paid in 2020. A state or local tax refund is either included as other income, or it is ignored. And the question is whether they itemized during 2019. So if they itemized in 2019 and their benefit from itemizing, so their state and local taxes were included in their itemized deductions and made them go over the amount that they could get for the standard deduction, they got a tax benefit for that. So when they get any of that money back, that's income. So up to the point that it was a benefit. So if we itemized in 2019 and we had more taxes paid and all the other itemized deductions exceeded the standard deduction by more than $300, then this refund would be taxable income in 2020. If we didn't itemize, or we did at all, then it's not taxable. If we itemized and our benefit was somewhere between 0 and 300, meaning we went over the standard deduction by somewhere between 0 and 300, whatever amount we went over, that part would be taxable income in 2020. So it's not, it doesn't offset what we paid in 2020. It literally is listed completely separately as income. All right.